A very warm welcome to all investors present here. We have with us our founder Dr. Mohit Batra and CIO Mr. Sunil Damania live in today's Power Series event. Bring in any of your concerns, challenges and curiosities on the stock market and we'll be happy to answer them. Over to you, Dr. Mohit.
Thanks a lot. Curiosity on the stock market. Everybody is equally curious, fearful and I would say hopeful in the current market scenario. Obviously last 2 days has given some hope back. But we are. This is a very interesting power series today with me and Sunil together. Primarily, the format of the power series for some of you who are new is that we'll have a brief 10-15 minute presentation first, and then we will pick up almost every single question, provided the time allows, till the time that we are here and keeping this webinar live. Now, before I start, let me just thank one of the investors, Mr. Deepak Jayaram. He had come down to the office on Monday to meet up with me. He's our Infinity and a very long duration Mojo professional client. And he came up with some set of suggestions. I wanted to thank you, Deepak, for coming in and meeting up with me. One of the main suggestions that he had given, which we are implementing today as an experiment, is that he said that normally your job on moderation is not very good, which basically means that, the questions that we pick up, sometimes you feel my question is not getting picked up. I put my question first and, you guys are not picking it up, or you guys are not picking up because you don't want to answer difficult questions. So there's nothing like that. Obviously, when the moderator picks up the question, we don't know what question he's going to pick up. So, I'm not seeing the back end of the question, where the questions are coming, where you're putting in questions. And hence, the selection of the questions is not on Sunil or on me. The selection of question is purely with the moderator. We are eliminating the role of the moderator. And what we'll do now is we will answer the questions in every single question. We will showcase you the back end on which you're putting the questions. And we will start with the first question. And we will try and finish every single question that has come. So every question will be answered. Now, having said that, there are certain repeat questions where we will say that we've already spoken about this. Stock-related questions where that we don't answer stock-related questions. So that will be told out there. What you need to do is the earlier you put the question, because it is on first come, first serve basis. So the earlier you put the question in, there is a 100% chance that we'll pick up every single question. So the earlier the question, now for example, if there are 500 questions that come in, we can't pick up 500, but we will start with the first question, the second, the third, the fourth, the fifth, the sixth, the seventh, the eighth, every single question. So every investor gets a chance, and people who put in their questions first will be answered first. But that's the big change that we're doing. We are taking one more role. We are taking the role of being a moderator also, Sunil and me both. And we will try and moderate the whole Q&A with you directly. And we will also show you the backend from which we are picking up the questions. And we'll pick up all the questions. You have to just make sure you're early in the queue rather than later in the queue, because sometimes if we get a lot of other questions that we can't pick up because of paucity of time, then obviously we may miss something. But otherwise, our commitment to you is that we will pick up 100% of the questions. With that note, let me hand over to Sunil for a brief presentation, keeping the negativity low, and then we will get on to the hopeful Q&A. Thank you.
Thanks, Mohit, and I'm very happy that we introduce a new change in how we pick up the questions. I think definitely people will love it, but please do give your feedback on that. Our job is to keep improving on what we are doing. So, small disclaimer before I open my presentation, that investment securities market are subject to market risk. Please consult a financial advisor before buying and selling any stock. This webinar is only for the education purpose, and historical performance no indicator of a future returns. So with this, let's try to understand what has happened to the war impact. On 20th Feb, the war started with Iran, and India's weakest point is crude oil and the oil and gas. Almost 90% of crude oil India needs to import, and almost 40% of our natural gas gets imported. And that's it's a whenever there is a problem on the supply side, India has to pay very heavy price, and that exactly what has happened. If you look at this, since 20th Feb, what was at $73 per barrel, and of course we had $60 something, it's gone to $103 barrel as of today. So 42% increase in the crude oil has gone up. It's moved up. At one point of time we had gone to 105 also. It did not sustain, and our sense is that this number that we see may not get sustained going forward. There are a couple of reasons why we believe that. So what is that supply side pressure should get released, and India should get some more supply in the form of gas and the crude oil, either from Russia, which has anyway been allowed, and India have been buying left, right and center. And second thing, there will be some relief on the Strait of Hormuz, and if you want we can discuss, you can put more questions there. Second thing, normally the belief has been that the price of gold and silver should go up when there is an uncertainty, and there is a very big learning that all of us must understand. In stock market, there is a cause and effect. It proves very right in the theory, it doesn't happen in the real life. I was on 20th Feb in Zaveri Bazaar to sell some of our old gold jewelry, and I've been advised by each and every jeweler, "Sir, abhi mat becho, it's going to go up." Look at, from that day, the gold is down by 7% despite the rupee has weakened, and the silver is down by 17% from that kind of a peak. So you can, from that price, to, from that level. So not sometime, we are ye hoga to ye hona chahiye. There is no strong correlation that happens in the Indian equity market and the global equity market. Normally people say when the rate of interest goes up, the Indian equity should not do, because P should normally come down. But we have seen historical also, the rate of interest moving up in Indian equity market also doing very well, and so on and so forth. So I just wanted to prove that the data, that don't make an assumption कि ये होगा तो ये होने वाला है. And I think this gold and silver proves a point. Indian equity market did relatively better as compared to emerging markets. Why? Because we are down by 5.6% or so, while the emerging market, MSCI emerging markets, as you can see, is down by 6.1%. So in 2025, we have been more volatile, we have been more shaky, but this war doesn't seem to be breaking up so much confidence. Before 20th Feb, there was a concern about the Nasdaq. Why? Because AI is going to create a lot of disturbance. And look at, one of the strongest and one of the most resilient index in the global market has been Nasdaq 100. If you remember, IT was one of the weakest in India, and somehow IT seems to be doing reasonably well during the, and no one talks about now AI, because the whole focus moved to the crude. That's how the market behavior, market sentiments are. So remember, all sentiments are temporary, all themes are little temporary. If you remain calm and patient, people do make money in the equity market. Let's try to understand some of the strategic oil reserve which has been announced by IEA members. What does it mean actually? So, today the world needs about 105 million barrels per day. That's a global demand for the crude oil. Okay, 20% moves through the Strait of Hormuz. Okay, and in other words, if I have to do 105 multiplied by 20, about 20 million barrels per day is a disrupted supply. So 80% is quite okay, 20% is a problem. And for India, Hardeep Puri on 12th March made a statement in the house of the Rajya Sabha, on the house of the Lok Sabha, that 40-45% of India's crude oil comes from the Strait of Hormuz, and they are trying to get it more from the non-Hormuz, what we call the supply side. And I think we should be fine. So we don't see any kind of a pressure on petrol, diesel kind of a stuff. But gas seems to be a little concern, which hopefully in next 6 to 7 days, I think things should get normalized, because we would keep getting a supply. Now, what does this trend, the strategic reserves of 400 million that IEA is going to release, where does it fit into the scheme of things? More than 100 million barrels per day, the buffer basically covers only 20 million has been impacted, am I right? So it basically covers for 20 days. And total reserves with the country is about 1.2 billion. So in other words, we don't expect too much release going forward from the IEA members. So even IEA members understand that they can't go down to zero instead of or strategic reserves. So eventually, I think they will. Now it's more of the pressure on the IEA side also, how do we find a solution to this problem? And when there is when you see that you can't solve the problem, sometimes you come more on the negotiation terms, try to see that how best we can come out of this, creating a win-win situation on both the sides. So my sense is that IE has a little more less window to prolong this war. So somewhere they will find a midway out. Trump has been making kabhi haan kabhi na kind of a scenario, but even Trump understands that what is happening, and of course he has been getting setbacks one after another. This week, he wanted to remove Jerome Powell, saying that whatever the renovation happened with the Fed building has been illegal and overstated, and there is so much irregularity. Fed, the court has given that there is nothing kind of a irregularity, and there is nothing wrong with that. Who knows? Jerome Powell may continue till 2028 as a Fed member. So somewhere Trump is also getting a message loud and clear. NATO members clearly stated out loud and clear, we do not want to be part of this, policing the Strait of Hormuz. So which clearly sends a very correct signal to the Trump that people are not going to get bullied by him. People will see what is in their interest, and so on and so forth. One good thing, fortunately for India, is that China and India most probably will see more crude flowing through the Strait of Hormuz as compared to some of the countries which are aligned with the US in terms of this war. A lot of people keep asking that, apna LPG, can we not increase the supply of LPG? And I want to give you some technical details here. See, LPG is a byproduct. It's not a product which can be, बोलता है ना, raw material ज़्यादा डाल के product कर दिया. LPG is a byproduct. When you process refinery, मोटा 35 to 40% comes from the diesel. And depending upon some, companies have a better refinery module, they can do that better because diesel makes more money as compared to anything else. Petrol is 20 to 25%. ATF, which is nothing but a higher grade of kerosene. ATF is not a rocket science, नहीं, वो kerosene ही है, तो थोड़ा better grade का kerosene, more purified kerosene, उसको ATF बोलते हैं, which gives you 10 to 15%. India is a very sufficient ATF. Only 5 to 10% can be come to the LPG. So if you are processing 10 barrel, you can get one barrel of LPG kind of stuff that comes out. So it's not easy that you increase the production. Of course, you can play around 1 or 2% here and there by putting some catalyst converter and so on and so forth. But it's not so easy that 100% crude can be converted into an LPG. So I think that's technical detail you need to understand, because I keep seeing a lot of nonsensical thing on a social media where people say ये क्यों नहीं, और उन्हें बस थोड़ा practical ज्ञान भी होना चाहिए उसके ऊपर, what is possible, what is not possible technologically. Fertilizer is a risk as we speak, because India has a dual problem. One is that India imports a lot of fertilizer, which is the finished goods, which comes from some of this Gulf region, and second thing, to manufacture fertilizer you need a natural gas. For example, urea, you need a natural gas. So if there is no raw material, if you don't know sulfur, how can you manufacture this one? Fortunately, this time the government did a very smart thing, and I don't know what happened when, if you look at in the first 9 months, which was before this war happened, in 2025, India imported 69 million of urea lakh tons. In first 9 months of this financial year, they actually did 87.24 million tons. So in other words, India imported more than what they did last year, full year. Am I right? Something similar happened with DAP, 45 and 60. You can see the numbers, and of course this number would have gone up till Feb 2026, because on 20th Feb, the war started. And MOP, we have a little laggard, 43.16 versus 2.72. So on the fertilizer side, I think we have more rest assured kind of a stuff. And if you look at the stock position also of fertilizer, as compared to what it was the last year, that is Feb 2025 versus Feb 2026, urea stock inventory is 12.2% higher, DAP is 92% higher, and the MOP is 69%. So despite there's a challenge on the finished goods and the raw material feedstock, I think India is in a better position in terms of fertilizer. I'm not saying everything is hunky and dory, but I think it's not so grim as what being made out in the lot of media. Of course, India's subsidy cost will go up, but the urea price went up by almost 50%. But there is no so much price increase in DAP and MOP despite this kind of a scenario. Okay, there will be a impact on the global growth. Some of the most vulnerable countries like Europe, Japan, South Korea, Taiwan, India and China, because they import crude oil. It's a zero sum game. right? किसी का नुकसान किसी का फायदा. Who would get more benefit? The country like Norway, the country like Russia, country like Canada, and of course India is also talking with Canada now to import more crude or more gases from Canada. So that could be a one beneficial thing that can. So this is the country which can get benefit, country which will get an impact on this one. If you look at the Gulf economy, it is a double problem. What is the double problem in the Gulf economy? One, because of the revenue loss, because the आपका crude बिक नहीं रहा है because of Strait of Hormuz is coming under sanction. No, this one can. Second thing, the tourism. This Gulf region is more known for the tourism. Today morning I was in international airport and I did not see many people waiting for the app-based taxi for people. There were hardly anyone. In fact, you can count on the finger 2 or 3 people were waiting. Otherwise, on normal days, if you go on a normal this one, there'll be almost 100 people waiting for the Uber or a Ola or a Rapido kind of stuff. So I think they will see that, and that could one reason could be because of the number of people traveling to or from Gulf has come down. And again, Gulf as a region, which is supposed to be more stable, more better real estate price and so on and so forth, has come under a scanner. What would happen to Indian earnings? We don't expect too much earning in the last quarter of FY 2026 for the very simple reason. First 2 months of the last quarter has already gone very normal, and we had seen very robust growth in the December 2025 quarter that would have continued in the Jan and Feb 2026, and you would have a lot of inventory basically which would have taken care of post 28 Feb. So we don't expect too much impact on the Q4 of FY 2026, but there could be an impact on the FY 2027. And the challenge could be rising input costs, supply chain disruption, and deferred demand. These are the things which we need to keep watching. Of course, the post now in next 15-20 days we'll start getting results, and we'll need to listen to the commentary what kind of impact. But it will definitely have an impact, that's for sure. The impact is more profound in the MSME sector. The working capital cycle got little prolonged. They are not able to get the raw material and so on and so forth. So we need to wait and watch what happens. But yes, definitely will be impact. Whether the impact is 50 bips, whether the impact is 75 bips or impact is 100 bips, we need to wait and watch. Still, there is no little clarity. It's all depending upon how soon the war or the stability comes to this region. Today, FOMC is going to announce the what we call meeting, and we don't expect any rate cut. If this things continues the way it has been, it's going to be inflationary, and who knows? People are talking about rate cut. Maybe very soon we can have a rate hike on the table. Remember, again I repeat, not necessarily higher rate of interest is bad for the equity market. Yes, in theory, it has been proven time and again that that is the way. The bookish knowledge is saying something else, but the empirical data suggests otherwise. So we have seen the interest rate going up, and so is the case with the equity market. Just a classical example. India, one of the best rally in the Indian equity market happened from 2002 to 2008. If you remember that, the crude oil price, which was $20 per barrel, went to $150 per barrel. Inflation was high, the interest rate was high, and Indian equity market went from 2,000 to 20,000. 10 guna बढ़ गया despite crude oil going up by 7.5 times. So that's how. So there is no correlation even though in theory it does give an interest. So ऐसा जरूरी नहीं कि rate of interest बढ़ा तो Indian equity market लिए खराब. And something very classical example we had seen post COVID also, the rate of interest did move up. Of course it came down and it started moving up, but we did not see Indian equity market or the global equity market declining. Let's very quickly try to understand. The 63% of the India's market cap is below 30% now. There is a switch spot between 15 to 20, which is 21%. So now this market become a more value pick market. So there are a lot of companies which are available at a reasonable valuation. Previously, what was happening, everything was very, very expensive. But now you can see some sign of a good valuation making a comeback. And hence, one should use this as an opportunity to add more money to the equity market. Even if you look at the trailing 12 months, we had 22 times. I think if you look at the 10 years average, we are below that. So that's one. Even if you look at the market cap to GDP, we are 114 times as compared to 150 times. So I think somewhere because of this time correction, because of this price correction, Indian equity market has become more and more reasonable. India's present market cap is lower than what it was in September 2024, despite so many companies coming in with an IPO. Am I right? So you get an idea of what kind of time correction we have seen and what kind of price correction we have seen. FPI have been selling 77,000 crore has been already been sold by FPI. We don't expect these numbers to further increase going forward because we do believe that whatever massive selling has to happen by FII has already over. So I think we are in the fag end of FPI selling. We should see turnaround happening with this. With such a short presentation, let's open the floor for question answer. And as we promised, we will take you through the this one. So let's start with this. So Mohit, would you like to pick up question or should I?
Let's pick up.
Yeah. So I'm just refreshing this.
649. So Biren Parekh.
Okay, Biren Parekh. Okay.
Should I book losses on sell and strong sell stocks in my portfolio and reinvest or keep funds in cash for deployment after the situation stabilizes? Birenji, my view, and I'll give you my view on this. I think sell and strong sell you should anyways sell. There is no question about that. According to me, the markets are already corrected 8%. See, please understand that the peak is formed at the bottom is formed at the peak of fear. So according to me, the bottom has been formed. It may be a 1 or 2% away or 2 or 3% away at maximum, but I don't think so. Beyond 10% marker, the market will fall. We are already at 8% and market's recovery, if on a single positive news can be very sharp. So you've seen that since yesterday and today, markets are already up by around 2%. So I would suggest that instead of trying to time the market, we are good enough with the 8% kind of a correction. I would ideally sell and strong sell and move into the buy side.
The only thing, should he keep money in cash for deployment if the situation stabilizes?
I don't know. Maybe you can keep 25% cash, but 75% I think you can get in because another 2, 3, 4% correction, if it happens at all, you will have 25% cash to get in out there. Also, when you see that the stronger stocks may not correct as much as the weaker stocks. I'll give you an example. There was one company in PMS that we were looking at. We were sitting on some cash for almost a month, and we were not investing, specifically when the war started. And 2 days back, me and Sunil decided that we will now invest it because we got a very good 7-8% correction. The stock was down by around 15%. And we said that that's enough. We've got enough greed in here now. Let's go in and start investing. I mean, the same stock is up by around 3.5% today. So we've started deploying. We are in our strategies. We are not sitting on maybe we have a couple of percentage of cash, but otherwise we don't. So my short answer out here after a long answer is that you can deploy maybe 75%, 25%, just keep it in case the market drops another 2-3%, but we are very, very close, if it not already hit the bottom.
Okay. The next question, which sector we must enter now due to Middle East war? Ramanathan sir. So let me take this. To which sector? I think to us, I think there's a lot of excess pessimism in the IT. That it could be one sector that one can look at it. Pharma is another sector that looks very, very promising.
Sorry, Sunil, he's got also the next question. Is it time to invest fresh in IT stocks?
Okay, good. Fresh in IT stocks. So I'll take up
He's got a third question also. Any sector we must exit due to Gulf War?
Oh, so
he's got 3 questions. I'm taking all 3 together.
Oh, okay. I missed that. So, okay. So let me answer one by one. To which sector which basically looks good? Don't look at Middle East war because ये war कल खत्म हो जाएगा तो क्या आप बेच दोगे क्या? So I think your thought process has to be little more medium to long term. It's not going to go on forever, this Middle East war. Our sense is that this war will last for 3 to 12 months. When it started, we stated that probability of that happening is near about 40%. We don't extend this or 20% probability that what happened with Ukraine and Russia, it may continue. But our sense is that we should see some kind of a green light on the war front side between 3 to 6 weeks. So which is basically third week we are already there. most likely it's another 3 weeks. But you don't buy stocks based on 3 weeks kind of a time horizon. So our sense is that pharma looks good, IT looks good. Who knows, FMCG make a strong comeback, because today the FMCG looks a little weak purely because of your packaging cost would have gone up because of crude oil price gone up, because there are a lot of this one that comes into. So that's the one you should look at it. IT, for the very simple reason, valuations become very, very reasonable. I know people have been talking about AI. AI is a story which will play out, no doubt about it. But ये कोई बेवकूफ़ नहीं चला रहे company. They will find a solution and they will readjust that to see that how they can use AI as a tool to increase their top line and the bottom line. So, and the valuations become, some of the IT companies are basically giving you a yield of 5% or so. ऐसा लगता है कि वो company बंद हो जाएगी, which I don't believe. So the valuation is there, good, and please go ahead. Pharma looks extremely good to us. FMG looks very, very good to us. Who knows? Government basically wanted to give a lot of fillip to the economy, because they do understand that a lot of MSME sector needs some amount of a stability. So some of the sector like BFSI, for example, they could see some more liquidity coming in, and that could help them. So these are the sector which we believe should do well. Your next question was IT. I think I already responded to. And which sector we should avoid because of exit due to Gulf War. I think one thing which looks little concern at this point of time is all marketing companies, because what has happened, the crude oil price has gone up and you are not able to increase the price of petrol and diesel. Of course, on paper, it's deregulated, but in real life, we all know that they are not doing it. So they are not going to pass on because it will be more inflationary pressure. So I think they will be forced to absorb this GRM, that is gross refining margin, and hence they may see some kind of this one. And again, should you take a view for 3 weeks and 4 weeks? The answer is no. We do hold one oil marketing company, oil refining and marketing company in our PMS portfolio. We did not get out of it, and today the same company was up by 3.5%. So should we take so much view which is myopic in terms of that? My answer would be no. So don't make an exit just because the Gulf War is there.
Okay, let's take the Mr. Nagarjuna. Is this time to accumulate TCS and Coforge? Sir, as you know, we don't, and I know that some of the investors towards middle are getting very angry that why can't you answer stock-specific questions. The reason we can't answer stock-specific questions is that our answers are not going to get different from what is there on the site. So if the score is 85, if the score is 75, my answer cannot be don't buy it right now. So that is the reason that we don't answer stock specific questions. And it would be too much for you to understand and ask us that we should know all the 4,000 stocks sitting here as two human beings when we've created a system where we have a 10-year track record now of performance right in front of you. Let's go to Ritvik Raj. We have been purchasing for quite some time as per your advice projection. Most of them have fallen substantially. What should be the course of action? I don't understand what you're trying to say, sir. If you're saying that when the market's correct, 8% MarketsMojo should give you a 20% return, I think that's a high expectation. If the market itself has been... Markets on a YTD basis are down by around what?
8 to 9%.
8 to 9%, right? Do you know that when the index falls by 8 to 9%, individual stocks fall much more? Do you know what retail investors who are not associated with MarketsMojo are going through today? When I go and meet the brokerage houses and their CEOs, people are bleeding, especially people who were dancing around the option strategies and the futures and the traders. There is a bloodshed in the market. So please understand that no advisor or no research house could tell you that I will beat the market even when the market is in a geopolitical issue or in a bearish market. That is not something. If that is your expectation, sir, I'm sorry. But otherwise, if you say that I have never made money with MarketsMojo or I have, in the last 1 year, 2 year and all, then please tell us your numbers and we can discuss that.
So your course of action should be very simple. Remain calm and composed. This is not a time to get panic, because most of the time our emotions allow us to do something which we are not supposed to do. and we repent very badly. So remain calm and composed, and you should be fine.
Okay, 886611J saying, what do you do in this type of conflict going? You sit tight, you keep making your treasure hunt. When I say treasure hunt, you keep getting out of sell stocks and strong sell stocks and keep looking at, I typically look at how much I'm getting a strong buy or a buy stock corrected in the last, say 1 month or something. If I'm getting the same stock that is strong, fundamentally strong, 15-20% cheaper, I think you also know, I also know, it's a matter of time that 15-20% that got taken away by the war may give you another 5% negative, but the recovery of that, it's like a spring. It will come back to its intrinsic value very fast. So I would typically say, if you have fundamentally strong stocks right now, you can decide to top up. If you have sell and strong sell stocks, you can decide to clean it up and go with a better valuation in the market for strong buy and buy stocks. Sunil, anything?
No, that's fine actually.
Okay. What is the right way of tax harvesting? That is Mr. Sanjay Gupta.
Gupta sahab, I don't know how many people would have actually tax to pay in this kind of a market. So it's difficult tax harvesting karna. But the tax harvesting in a way you should do it so that look at the kind of portfolio you have, look at the company which you are holding and making a loss, because tax harvesting makes only sense the company which is losing money for you, and see whether the reason why you bought that company, has the reason undergone a change for you to do that. If the reason continues to remain same, then don't do tax harvesting. But reason has genuinely become this one, please go ahead and do tax harvesting. Is the right time to do it before 31st March. But that's your first thing. Look at your portfolio, do sorting in maximum loss, and then look at each company whether the reason why you bought that company has undergone a change or not. If yes, please do tax harvesting. If no, just because tax harvesting you want to do, don't get out, because you never know, the script can bounce back very strongly, and whatever the benefit you were getting because of tax harvesting would go away substantially. I'll give you a very classical example that happened with me. I think a few years back I had one company which is from the textile, and sometimes I'm also a human being, so I also get carried away, and I was paying a substantial income tax. तो मैं थोड़ा आदमी थोड़ा लालची होता है, तो मैंने भी थोड़ा tax harvesting करना सोचा. I got out that company, and my story and the conviction was very, very strong. Of course, I did not get out 100% on that. When I got out some, and the FIFO method applies, and I did not at that point have struck mind. The script basically went 4 times higher after my exit. I could never buy that company again, and what I was happy with what now they're in my portfolio. So sometimes tax harvesting do go a little haywire. But the order I told you how you should do it. So be sensible in terms of tax harvesting. कभी-कभी ज़्यादा एक बार tax देके थोड़ा sensible कर देना चाहिए. Because if you do tax harvesting, that means you are selling some long-term capital stocks. And again, you rebuy, and if you decide to sell, then your capital gain would be short-term capital. And so remember that that arbitrage between long-term and short-term capital gain also.
Okay, Mr. Manoj Kumar is saying, when can we buy? Good time to buy right now. Markets are down 8%. I personally, as we said in our view, I think the bottom is getting formed. If you ask me personally, and I can be wrong, 8 to 10% is where I see the bottom. Things that had to get escalated have got escalated. There's only positive news or stale news that will become the regular item right now. I think it's not a question of the resolution of the war. The war, which is something that we projected a 3 to 6 week kind of a war, out of which 3 weeks is almost over. The war may go a little longer. It may become cooler war and war. I think the main issue of the economic impact is the Strait of Hormuz. If the Strait of Hormuz issue is resolved, which a lot of countries are trying to do, where India is getting into a pact with Iran in terms of sending medical supplies, if they are allowing the ships to come in out there. So everybody is looking at their own situation right now. But I think the Strait of Hormuz is the issue more than the war, if you ask me right now, as far as India is concerned. So that is primarily something that I believe that it cannot be more than a 3 to 6 weeks thing. Why? What is the reason for this kind of an optimism? It's very, very simple. 20% of the global supply of oil getting impacted, neither a US can control that, neither any other country can control that. So there is a resolution. This is not Russia, Ukraine, where the whole world is getting impacted, right? With a global commodity. In this case, the whole pressure of resolving is going to come from all directions. And you've seen you've seen Donald Trump taking one-off statements right now that, yeah, we want to end the war and we want to get out now and all of that stuff. So the signals have started coming in. I think it's a question of another ease out, another week and all that stuff. If you see that, then I think a lot of things can improve. You will not trust me on this, but according to me, in this whole scenario, the trump card is not Donald Trump, it is Israel. Because this is the heated up, insensitive thing that is happening, or maybe illogical thing that is happening is more from Israel than US. I mean, US could have gotten out there, and that is the US-Israel pact in between, in terms of how they have the economic impact in between that is being managed out here. So, according to me, 20% of global supply getting hit, the whole region getting impacted out there. There is no way that this will become a Russia-Ukraine situation.
If I can add, as and when the market, the beauty in the market is that जब भी resolution हो जाएगा, मनोज जी, ये market दौड़ेगा नहीं, भागेगा. In the sense, we'll wait on the sideline कि I'll time to the perfection, वो शायद वो नहीं होने वाला है. So if you wish to buy, please buy with the mental calculation कि the script I'm buying may go down by 5%, may go down by 10%, because no one has a you should not think that I'll be able to always buy at the bottom of the level, am I right? But whenever it will go up substantially, like which Mohit was talking about, one auto company which we wanted to buy in our PMS, we started buying and today it's up by 4%. So, if you wait on the sideline, who knows? And then जब आपने नीचे का भाव देखा है, you will now have guts to buy at the higher price, and you'll keep waiting for the correction, and you'll keep waiting for the correction for a longer period of time. So my sense is that please buy. Mohit used a very nice word. The bottom of the market gets formed at the peak of the crisis, and that exactly what is happening. So it looks like we are either from the bottom or we are close to the bottom. So of course you can do your due diligence, but I think it's a time to definitely get in.
Okay, HS1992.fs says selection of potential stocks, understanding of entry and exit points. Sir, if you're in a portfolio, then entry of exit points is something that we guide you, because there are certain times that we do, profit booking. There are certain times we may do loss booking. But if you're doing your own portfolio management, that is, you're managing your own portfolio, then strictly go by the score, I would suggest, because that is what we've seen over our 10 years. That is the best indicator that the guidance that we can give you out there. So follow that with the full discipline. The stock comes into a sell zone and a strong sell zone. I move the stock out and I go into the strong buy or a buy zone. That is what I will keep doing. We've been stating about the same things again and again over the last 8-9 years now. That is what I would suggest you. Mr. Bharat Mehta, the virtual portfolio feature has been withdrawn for a couple of weeks. It is high time this feature needs to be restored immediately. Please do the needful on a war footing basis. Mr. Mehta, thank you so much for this. Yes, absolutely, you're right. I personally feel that in the next 4 to 5 days, we will have this up and running again. What we have taken, there's a lot of suggestions that came from the investors in terms of what price we need to take, how the impact needs to be calculated out there. So a lot of features, and we are improving in the virtual portfolio, and those all will go live in the next 4 to 5 days. I apologize for the inconvenience caused since the time it has been missing, this particular feature.
And there's also a reason, the person who is working on our technology department, his father has been hospitalized in ICU. That's the reason we are not able to put it up. So that's another technical reason. I think we should not be discussing, but just to give you the perspective, Bharat Bhai.
Mr. K. Srinivas Shinoy, can we expect a de-escalation in the West Asia conflict? Well, I've already covered this. Sunil, if you want to cover this.
So we still believe that I think we have hit the peak of the escalation cycle. Nothing worse can happen from this level. I think senses will prevail, and I think we will see. And see, there is another thing which, if you remember, those who were attending our webinar during COVID days, we said market will never fall for the same reason twice. And that we have seen when the COVID, the two which happened, which was more severe in terms of health and so on, so market did not correct at that point of time. So market ka jo correction tha because of Iran and Israel-US war, it's there. Now this may continue for a longer, but market is not going to correct. And de-escalation should happen logically, because our sense is that we have peaks in the peak of the escalation.
Okay, Mr. Deepak Jairam says, I'm hoping to churn part of my personal portfolio to put funds into Infinity, while getting rid of sell stocks had been a no-brainer. What would be the best way to exit trim stocks that are hold/buy categories? Sir, we'll have to do a full evaluation of your portfolio. It's not a very generic thing, because it is portfolio driven. I don't know how many holds you have, how many buys, and what kind of liquidity you want to create, what is the amount that you have in your personal portfolio. If I have all of those numbers, then I think I can give you the answer very conveniently. But I need to know more about the portfolio that you're holding. Bhagwad, what will be the fate of companies like Swan Defense, who is now on defense sector and has yet to turn technically and financially viable?
Sir, as we mentioned, we will not be able to pick up any company-specific question. So don't feel bad. Please, we have a score available on the site. Please use that to take a call on that company. Again, request everyone, please do not put any company-specific question. We will not be able to answer on this platform.
Mr. Sitaramaya ji, hi, your comment on oil marketing companies in long-term says 1 to 3 years.
So, as I mentioned, oil marketing companies will definitely see some kind of a pressure on GRM, because the GRM is nothing but what is the price of crude, and whatever you manufacture, uska price kya milta hai. For example, if you are buying $100 per barrel, and as I told you, 45% diesel come this, uska price, so that goes into the margin. Now, if my crude oil price is going up and my finished goods prices are not going up, my GRM will take an impact, am I right? Which is no-brainer. So the short-term outlook looks little bearish on them, but globally it looks like that a lot of refining companies are going out of the stream actually, and that should help the GRM to move up. So we do own in one of the refining and marketing companies in our PMS portfolio. We are not getting out because we don't want to basically take a knee-jerk reaction and get out of that. So my answer is that 1 to 3 years looks extremely promising.
Mr. Sai Sanket says, in a time where markets are very volatile, flat markets and technicals keep changing, which of the 4 parameters should be given higher priority if you rank them in order among improvement in financial trend, valuation, quality, and technicals?
Mohit, would you like
Very interesting question. This is specifically you're asking me the whole formula of the IP. I would personally feel in volatile times, I would typically, put a lot of importance to financial trend and valuations. I would put a little lesser importance to technicals. Quality obviously is not something that changes much in these volatile times. The reason technicals will go a little lower in my importance field is primarily because, if the whole bulldozer is going on the market, the stock has to come down. So that is my reason for giving technicals a little lower rating. I would look at valuation primarily because if I'm getting a better value of a stock and financial trend, because if the stock is doing well quarter on quarter, and if I'm getting better valuation, those 2 parameters become important to me in such times. Sunil?
I think, yes, I agree with you. I think, Mohit, there is nothing much I can add value to this now.
Okay. Jatin BS 61, ONGC or BPCL, sir? Again, the same thing. I'm really sorry for you who are expecting us to answer stock-specific questions. We do not do that. You know that for years now. But I can't stop you from putting this in. Mr. Rahul Kumar Jain, view of Sunil sir on small cap and mid cap underperforming has come out to be true at least in 75 days of the year. Mohit sir, are you still betting against Sunil sir's view and see long upside coming in next 10 months? Request both of you to provide strong points for their individual views. All right, give us both. This is a big war that never happened. We had told you that we will do this war. I 100% tell you that Sunil sir will go wrong on this. Wait for 10 months and we will see where it goes. Markets have played value, markets have played geopolitical issues, markets have played 2 wars. frustration is around the corner. If I see valuations on a long-term basis of small cap, mid cap and large cap is still very robust. Mid and small cap have got ruptured out there. According to me, equalization concept will tell me that when the stability comes, and hopefully the stability comes in the next 10 months. If this whole thing goes on for the next 10 months, then Sunil sir wins. But if the stability comes, which we are expecting it to come, according to me, small and mid caps, which will definitely deliver much more robust returns.
So I'll just say a simple word. Sachin Tendulkar always used to say, let my bet do the talk. I'll wait for the 10 months.
Yeah.
Data would be in front of you. And of course, we have a very bad habit of showing our report card, what we stated and what happened. So, I will never be 100% sure the way Mohit sir is that, because I will always be little this one. So there is a probability that mid and small cap will underperform the large cap, and I'm not changing my view because I still believe the more money to be made in the large cap as compared to mid and small cap. And आप सर हम लोग के बीच में मत वॉर करवा दो, वो चल रहा है एक वॉर, वहाँ पे हम लोग के बीच में क्यों करवा दो वॉर?
Frank.empire, hello Mohit and Sunil, greetings. How will global factors impact India, US interest rate cycles, crude oil prices, geopolitical tensions and global recession risk? I think some of these we've covered in the presentation. Sunil, if you have anything more to add on this.
No, I think we're loud and clear that don't expect rate cut which is going to raise in Fed meeting. RBI has given very... So sir, you go back to our equity outlook 2026 and we were the little contra. We said we don't expect any rate cut from RBI or Fed. At the max, we should expect only 25 bips rate cut. And the reason we stated very loud and clear that inflation is to go up. And this was that time, of course, we are not expecting Iran and Israel to happen. But if you understand the language of RBI, the governor was making a statement. If you look at the data points, if you look at the base effect, when you factor in these things, there was no rate cut. To go back to our January 2026 equity outlook for the full year, we don't expect and we continue to maintain that there should not be any rate cut. On the contrary, who knows, there could be a rate hike which people may start. Do we see a global recession? Looks little difficult at this point of time. I don't think so that we should basically budget into that. R word keeps coming every time post-COVID. It has never happened. So I don't think so that there will be a global recession. So we are not in that camp that global recession will happen. At this time, there are not enough data which suggests us to go into think in that direction at this point of time.
Okay. Mr. Debash Narayan Mishra is saying, I have a general observation on return calculation used by MarketsMojo. While calculating point-to-point returns, it seems that the dividend paid in the interim period are being ignored, and thus it sometimes gives us incorrect and misleading return calculation. It will be ideal to take the dividend amount and add notional shares at immediately ex-dividend prices, which should rectify this. It is a method that is used by mutual fund industry. Sir, I think we do use that. Dividend is a part of the personal portfolio. You have to adjust. There is a bell icon for it to get adjusted out there.
No. Okay. So that is for the bonus and splits, Mohit.
Yeah.
Okay. So dividend do get accounted in your overall returns, but I think you are right. In the point to point, it may not be calculated.
In the point to point, you are saying the dividend should be.
So you are right in that. But since inception, if you look at it, so when you look at the formula is very simple. The realized plus unrealized plus dividend income, and if you have a personal portfolio, you add that, the return that you say is getting captured there in that. But point to point, I don't think we are capturing that. You are right.
Ragi, Uday, sorry. Jason, can you send a mail to Ragish and CC me on this, please? Mr. Y. Venkata Reddy, sir, whether war effect to some extent is over or not, whether your opinion on Nifty will move at least 15% by December 2026 is still intact, or any changes at this juncture? Which sectors and which categories look good? Large, mid, small cap should be concentrated.
So we are not changing our view on Nifty 50 target. We did mention in the January 2026 that Nifty 50 will give 15 to 20% return. The reason why we give that number for very simple reason, we do believe the corporate earnings will be robust. We saw December 2025 the double-digit growth in the net profit, despite one-off impact which coming in because of the wage bill, which no one was expecting to happen. Am I right? Of course, there will be some impact because of this Iran war in the Q1 of FY 2027, but that will. We do believe FPI will come back very strongly because Indian equity. If you look at the one country which seems to be more stable in terms of what is happening is India. A lot of money people previously Indian equity was not on the discussion table. Why? Many times when I used to do review with people say gold mein kitna dalu, silver mein kitna dalu. That question has anyway gone away. So now the equity is making a strong comeback. And even if you look to the FPI and more you listen to them, they are saying now they are looking at Indian equity market as a potential. And if you look at Indian market, did better as compared to emerging market. In one of my slides, I basically presented the data. So it looks like 15 to 20%. It's very much intact in terms of our projections. And of course, me and Mohit basically differ in terms of which one should do well. I personally believe large cap should do well. Mohit believes medium and small cap should do well.
Mr. Prakash Payanur basically thinks that we are frauds. He's saying, sir, do you know about a stock? I am seeing only marketing. I will ask you one simple question. How do you determine PE of a company quantitatively? What is discounted cash flows to intrinsic value of a company and its share price? We do not need you to give marketing gimmicks every day. Find the intrinsic value also. Blah, blah will not improve your intrinsic value. Okay, sir. You have a choice. If you think that we are doing blah, blah out here, then you have a choice not to attend these webinars because these are not compulsory webinars to attend. Do we know about any stock? No, we don't know anything about any stocks. We just run a company for the fun of it. Is that what you're trying to say? We have a 10-year track record, sir. You have another question you put. Why are you not answering stock-specific questions? I've given you the product. What more can I do? If I have given you the product where I have given you sticking my who in this country today sticks out on all 4,000 listed stocks? Who gives a recommendation or a research recommendation on all 4,000 stocks in this country? Please tell me. I recently saw Kotak's ad. Were you seeing IPL? Kotak's new ad, which they're spending crores on, says that now Kotak evaluates more than 300 stocks. And we have been rating 4,000 stocks for the last 10 years. So, if you don't want any marketing mails, you can Jason, please block this user for any marketing mails. We will not show you any price benefits or anything. That is absolutely fine. In terms of how to determine PE of a company quantitatively, discounted cash flows or to intrinsic value of a company and share prices, if you want us to tell you all of this, please come to the office. We are most glad to tell you how these things are calculated. All of these are calculated within the formulas that we use. But if you want a very dedicated session on this, we are happy to guide you, sir. We can talk about this in detail. But this is a forum where it is difficult for us to explain you these 4 or 5 factors and the importance of those factors. Mr. Rahul Kumar Jain, with no good news, markets have risen today. Is this a trap for investors as markets may fall further due to economic slowdown and higher inflation, which will restrict interest rates to fall and will hit their top lines as well as the bottom lines in the coming quarters? Okay. I'll tell you my view before I think the expert Sunil will comment on this. But my personal view is that 1% hike, 2 days of hike, we should not be celebrating. I don't think so. Anything has happened for us to give this buoyance that has come over today and yesterday. I don't think so. There is anything celebratory out there. The only thing that is coming in right now is optimism in the market that the bottom may have got formed. That is the only thing. So I think it's too early to say that it's a reverse trend. It's a reversal of the trend. I don't think so. That is a statement we'll take. Unless there is some firm pact that is reached on this war, unless there is some, opening up of Strait of Hormuz, as I said, unless these things happen, the impact will remain out there. Now, when you say what can be the long-term impact of this, see, the war is a 3-week affair. So 3-week global supplies got impacted out there. If this gets over sooner than expected, then I think the impact will be very, very marginal out there. The impact will only come if this continues and becomes a Russia-Ukraine situation, which I don't know how it will happen, because the economic blowout of this particular war for US, for Israel, for Middle East, for India, for China is huge. So when the top three economies are going to suffer, and when the whole of the region of Middle East is going to suffer because of the economic impact of there, it is in nobody's interest to do this, right? So the impact, the resolution of this has to happen. I mean, if Russia-Ukraine war, nothing happened to us, right? But what will happen? Because we are getting our oil, everything's fine, not correlated, no global supply got distracted out there. Maybe some sectors got distracted a little. We went past that, right? Here, the situation, it's not about, the impact being prolonged a lot. It is about every day a country is going to count. We lost 5 billion today. We lost 10 billion today. So if US is ready to count out on an everyday basis, trust me, that 30% confidence vote that Mr. Trump has got in November will go down to 3%. Because when you are spending so much, we are not spending anything on the war. We are getting hit by the supply. But when a country is spending on a daily basis so much amount of money, I don't think so anybody, and he's a businessman, right? I don't think so anybody in the sane mind would like to continue this on a longer term period. The bend has to come, and the bend will come in the next 2-3 weeks at maximum. Sunil?
I think, Mohit, I agree with you. It's not a trap. And if you look at this today, advanced decline ratio, see, sometimes the index could be manipulated in the sense only few companies participate. Today, advanced decline ratio has been very, very robust. And if you look at the NSE volume, it was more than 1 lakh crore. So that means more people bought and sold at the higher prices, isn't it? And I think it's a very good indicator. So it doesn't look like it's a trap for the investors.
Okay, next question is by Mr. S.S. Namdari. MarketsMojo is mostly a two Dr. Sunil and Sunilji man army, unlike say a AMC like HDFC AMC, less of an organization. Although it cannot be 100% true, but absence of two pillars is likely to make a significant impact. If not, why and how? What will happen to advance subscription amount of 10 years of in case of an unforeseen event? What are your views on this? Sir, you feel that we are a two-man army is because only two of us are allowed to come in front of you. So we knowingly or unknowingly have become the face of the company. There is nothing that if you feel in our organization we don't have a org structure, we don't have a succession plan, that is not there. Mr. Namdari ji, thank you for your concern, but I would invite you to the office. We are a 50-member team. We have heads of departments. We have head of finance. We have obviously CIO. We have a head of research. We have a chief technology officer. We have a head of technology. We have a head of products. So, we have a head of HR. We have every single thing that is available. Now, sometimes you feel that, for example, a fund manager who comes to you from HDFC and he keeps talking to you, you will also believe that this guy is the fund manager. If he goes, then the AMC will collapse. It doesn't happen like that. I personally have come from very, very established organizations, and I know how to create an organization. I know how to create a succession plan. You may not, if anything uneventful happens, you may not see me, but somebody will replace me. So I don't think so that is a concern at all. It is a fiber of the organization that we've created of making sure that we have trustworthy, honest people who come in front of you and who try and address your queries. And mostly when you see one-on-one face again, you feel that the whole organization is that face. That is not how it is, sir. MarketsMojo is much bigger than that. MarketsMojo is much more stable. I don't think so. It will definitely have an impact. I'm not saying that, denying that it will not have an impact. But, the impact will get managed very well with my team. Most of our leaders in our organization today are, some are founding members who've been there with us for 10 years. Some have been there for 8 years, 9 years. So there's a lot of strength in the organization, which I don't think so we can ignore per se.
So Namdari ji, you are asking a question: what would happen to Indian cricket post Sachin Tendulkar? When Indian cricket basically won 2 World Cups, am I right? You are asking what would happen if Virat Kohli goes away. In the recent World Cup that we won, Virat was not there, Rohit Sharma was not there. I think the way the organization has been structured, that if something has to happen to any one of us, the organization will continue without any disruptions, because that kind of a thought process already gone, and we have a people able to run this organization in absence of either one of us or both of us.
Mr. Rajipal says, Dear Mohit, the war is still on in full swing and doesn't look like over, even though the Orange Man says otherwise. So does this rally look like a dead cat bounce or a real one? Sir, it's to me, it's not a rally. It's a frustration gathering. Market corrected 8%. People try and take benefit of that. So although Sunil, did point out that rightfully that the advance decline ratio was very encouraging. I personally believe that there's nothing for this rally to come in apart from the fact that is the bottom being formed, because the same, and as I was stating earlier, when the index corrects 8%, stocks correct much more than that, much more than that. So people who are seeing the same stocks that was 2 weeks back down by 15-20%, there's a natural urge to go in out there. That retail investor is not the one which is buying this. According to me, maybe institutional investors are going in and trying to pick this up at this particular level. So I don't think so. A 2-day should be taken as a rally. I think the rally will only come when there is a firm resolution of this comes and opening of Strait of Hormuz, which is taking me to the next question, which is Jacob Jose. Even if Strait of Hormuz reopens, will Gulf supply of energy reach pre-war levels soon? If not, what level of inflation can it cause and impact of equity markets? According to me, if it opens up, it opens up. So it will reach to pre-levels because they have the stock. They are not able to sell the stock. We are not able to buy the stock. So if the Strait of Hormuz opens without any disruption, then I think the flow will start. Then the impact of war is a 2-week impact or a 3-week impact or a 5-week impact, whatever that impact is, right? But I don't think so. The impact will be that now we will allow 20% of production to go out. That's not a resolution that anybody is looking at. They're saying that, how it was open for everybody, it is open for everybody. So I think that, I don't think so it will be a 20-30% supply we'll let you do, but we'll not let you do full supply. That is not a resolution that the world will look at.
On the contrary, supply will be more than what the demand would be, because anyway, the production is there, storage has not been shipped. The moment that gets opened up, the supply will flood the market. And the way we have seen that 45% jump in the crude oil price, who knows, we may see equally quick decline in the crude oil prices. So I think it will be very sharp one, correction in the crude oil prices and the gas prices. What we'll do, we'll take last 5 questions, because in the paucity of time, it's already 8 past 10.
Okay. Mr. Avijit Datta says, when is the model portfolio integration with broker happening? As a result, portfolio rebalance becomes seamless, execution is timely. Sir, give us 10 days. I assure you in 10 days we would deliver this. Maybe 10 days to 2 weeks at maximum. My chief technology officer, these are very complicated integrations, and as Sunil pointed out, my CTO, his father is in ICU for the last almost 3 weeks now.
Yeah.
And we don't want this to be done by anybody else, because he's coded the whole integration. That is the reason we got a little delayed on this. Hopefully everything will be fine, and we'll have this feature available for you in the next couple of weeks. Okay, Mr. Mohammad Zakir Ali, sir, how would you see the markets in near future? How much percentage of correction or drawdown trend can be expected? Sir, as we have been saying that we are looking at this year at around a 15% marker in terms of upside. We personally believe another 2-3% is where the bottom will get formed. As I said, these are under disclaimers that we are market is, we are all slaves of the market. We personally believe that this is our personal view, and you should take it with that pinch of salt. Both me and Sunil are, I think, for a change, agreeable on this, right?
Yes.
All right. Okay, Mr. Ketan Karnani, do you have any screener where we can see the promoter buying right now at distressed valuation?
I don't think we
No,
have that.
no, sir. Suggestion. It's a good suggestion, but we don't. Promoter buying is a very good suggestion, sir. At a distressed valuation. It's a good suggestion. Jason, send me a mail on this, please. Thank you, sir. It's a good suggestion. We'll try and put it in our project sheet and see when we can deliver this to you. Mr. Siddhant Shah, hi. In case of a sudden crisis like a war, MarketsMojo, Portfolio, Mojo Infinity are slow to respond in giving sell call for companies like PSU oil marketing companies, which would take a hit. I got 2 calls of sell today after 20% drawdowns. Why does the portfolio not respond from flat crisis like this? Okay. I'll tell you how this happens. Sir, wars are transitionary phases. These are events that happen up and down. We don't take any manual calls out there because we've seen that whenever we've taken a manual call, it is not terribly gone in our favor. IP has repeatedly told us that if you sell a stock early on, then there are chances, or mostly we go wrong because the stock jumps back again. So there was a time and frame that we had tried this, but actually it didn't work. So the reason you've got a 20% after it fell 20% is primarily because we have a stop loss out there. We do not take more than 20% loss in the portfolio, and that is the reason it hits the stop loss and it moves out. Although the stock may be still a buy, but if it is hit a stop loss, it moves out. So we are not taking any kind of a call which basically feels that, okay, now, if this happens, then these are the 5 sectors that will get affected out there. The rotation is, as Sunil was pointing out, that from AI now becoming the better index, the rotation is very fast. Let IP do its job. It knows the best. We've done this for 10 years. We know that our calls can be transitionary. We can be right for a time and period of time. But on a longer period of time, what happens is that it conditions our mind to then start giving manual calls. That I personally, when I can say these sectors will do well, I can also say what sectors might do, these sectors will do bad, what sectors might do well in the next, say, 1 year or something. So it is very difficult to mix these 2 recipes together of manual and, the IP out there. In fact, Sunil has been telling me for a long time now that he would love to run a manual PMS, which is completely not dependent on IP. I don't know if that's a good idea or not, but maybe I'll hear from you. You can give us a feedback on that. I am not 100% convinced on it, but I know that Sunil can do this beautifully. But but mixing these 2 together becomes not a good portion to consume.
Okay. Last 2 questions, Mohit.
Mr. Deepak Jairam, thank you. Not a question. Honored and humbled that you found the suggestion useful and actionable. Listening to us and picking up the feedback is what makes MarketsMojo stand out in quiet crowd out there. Onwards and upwards. Thank you so much, Deepak. And as I said, thank you so much. I have taken, when I note down something on my diary, that means I'm listening. And your suggestions were very pertinent and to the point. And as you see, we are changing the whole format in which we do Q&A basis the suggestion that you've given us. MarketsMojo is made by you people. Whatever suggestions you give us, and we find those as good for our broader set of investors, we will keep deploying that. That is the thread of this company. Let's look at MSP. Due to war, entire world is suffering, especially China. Will it not lead to slowdown in the world economy as Gulf countries will also going to serve economically? I'm tired of speaking. Sunil, can you take this?
Yes, definitely, sir. So if you look at the China, did mention that they are not looking at a very robust growth in 2026. So definitely there will be an impact. But someone was asking about the recession, and we don't expect recession to happen. There will be a slowdown in the global economy because of the higher inflation and so on and so forth. But we don't expect the world economy to go to the recession. Mohit, since there is one question only at 7:30 wala, usko le lete. So then what happens is that we cover the first 30 minutes of question which is coming in.
Please take it.
Yeah. So one of the questions is the last one for the day. Why in case of sudden crisis like war, MarketsMojo portfolio Mojo are slow to respond? Well, we have covered that question. So I think that makes all the question covered till first half an hour of this webinar. I know we have not been able to cover many questions.
We've left out 4 or 5 questions.
1, 2, 3, 4, 5, 6, 7, 8. 8 questions we are able to this one. But I think we also need to respect the other people's time. It's a time for you to have a dinner also. So try to put your question as early as possible, and that has a high probability of getting picked up. With this, Good night. One final message from my side, and of course Mohit can also add on to that. This is a time to put more money to the equity. Please, please, please do not panic. One of our PMS customers the other day WhatsApp me and said, I want to add additional 10% in my PMS. Should I do it or not? That was on Sunday. And I said, please go ahead and do that. Am I buying more in the equity? The answer is yes. Because I strongly believe that market has either hit the bottom or very close to the bottom. And you cannot time to the perfection in any market, whether it's a gold, silver, equity, real estate or anything. Please start buying more in increase equity allocations. Mohit may have different view, but I'm suggesting you very religiously, please, please, please increase allocation, and you will thank us 9 to 12 months down the line.
Thanks a lot, and good night.
Good night.